All right, today we are cracking open an investment report on a company called Gulshan Polyols, or GULPY. So what's the deal with this company? Is it a hidden gem, or is it just a risky bet? Well, that's what we're here to figure out. Let's jump right in.
Okay, right off the bat, the analysis gives this company a strong 7 out of 10. That's a pretty high conviction score. So you gotta ask, right? Why are they so bullish on this company? Let's dig into what's really behind that number.
All right, listen to this, because this one sentence, it's pretty much the entire investment case in a nutshell. Basically, the big idea is this. GULPOLY's ethanol business is about to take off, and the market, well, it just hasn't really noticed yet. So, naturally, the first thing we need to do is understand this whole ethanol story.
So let's talk ethanol. What's the big deal here? And more importantly, why is it the main engine for this whole investment idea?
Okay, first things first, a little context. You know, Gulshan Polyols isn't just a one-trick pony. They're actually a pretty diversified chemical company. They've got products in everything from pharmaceuticals and food to paints and even alcohol. So that broad base gives them a really stable foundation to build on.
But, and this is a big but, despite all that diversity, this investment report is absolutely laser-focused on one thing. For anyone looking at GULPOLY right now, the real story, the part that could drive some serious growth, it's all about ethanol.
So, why all the excitement? Why is everyone so hyped up about ethanol? Well, it really comes down to three key things. First up, Indian government policy is creating this huge guaranteed demand for it as a fuel additive. It's like a massive tailwind. Second, GULPOLY has already locked in a huge order book to meet that demand. And third, they're not some small upstart trying to get in on the action. They are a major player in this market already.
Okay, so the story sounds great, right? It's really compelling. But look, a great story doesn't mean a thing if the numbers don't back it up. So let's pop the hood and take a real look at the company's financials.
And wow, this is where things get interesting, maybe a little weird. You've got this strange contradiction in the numbers. See, over the last 3 years, revenue, the money coming in the door, is up. That's great. But profits, the money they actually get to keep, are down. So how is that possible? How can a company be making more money but ending up with less? The answer to that little puzzle, well, it might just be hidden in this one number, 1.20. It might not look like much, but trust me, it's a super important clue for understanding GULPOLY's real financial health.
Okay, so what is this number? It's the company's cash flow to profit ratio, and a ratio that's above 1, that is a fantastic sign for investors. It basically means that for every rupee of profit they report on paper, they're actually generating 1.2 rupees in cold, hard cash. This tells us their accounting is clean, they aren't just playing games with the books. That's a huge green flag.
All right, so we've got a strong growth story and solid cash flow. The next big question is pretty obvious, right? Is the stock actually cheap?
So to answer that, we're going to look at something called the price-to-earnings ratio, or PE ratio. The simplest way to think about it is it's like the price tag on a company's profits. For GULPOLY, that price tag is sitting around 12.6. Now, for the average company in the Indian market, it's more like 22.4. So what's the big takeaway here? GULPOLY looks like it's on sale compared to everybody else.
Okay, so we've got a great story, we've got what looks like a cheap price, but what about the future? I mean, that's what investing is all about, right? So this analysis actually models out 3 possible futures to help us weigh the risk versus the reward.
And this chart, this is really the heart of the whole investment idea. In the best case scenario, the bull case, the stock could jump up by 47%. Now, in the worst case, the bear case, it could fall about 18%. Now, notice that asymmetry. The potential gain is more than double the potential loss. This is what investors absolutely dream of finding, a bet where your upside is just so much bigger than your downside.
And to make those percentages feel a little more real, this slide shows what could happen to a 1 lakh rupee investment over the next 5 years. You can see that in both the best case and the base case scenarios, GULPOLY is projected to beat the overall market average, which is represented by the Nifty 50. The risk, of course, is that bear case. That's where you'd see it really underperform.
So, after weighing the whole growth story, digging into the financials, checking the valuation, and looking at all those possible futures, it's time for the final verdict.
And the report's conclusion? It's crystal clear and totally decisive. It's a buy. And it all really boils down to this one number again, 2.6 to 1. What's that? It's the risk-reward ratio. For every 1 rupee you could potentially lose, this analysis suggests you could gain 2 rupees and 60 paise. That's the math, plain and simple, behind that buy rating.
But hang on. A smart investment isn't just about when to buy. It's also about knowing when to sell. And the report is super clear about the warning signs. Think of them as your off-ramps that would tell you this investment case is broken. So, if that big ethanol business starts to falter, if they get hit with major environmental issues, or if their profit margins completely collapse, that's your signal. It's time to step back and reevaluate.
So, there you have it, the whole investment case for GULPOLY. It's a really compelling bet on India's big ethanol boom, and it seems to be backed by some pretty solid numbers. But the big question that you have to ask yourself is this. With so much of this riding on government policy and, environmental factors, is this fast-growing company actually built to last? Let me know what you think. Thanks for checking this out.